that retail binge that's kind of going on in terms of these investors, these young investors that are running after GameStop and AMC and all that. Well, let me just say this: they're getting pretty body slammed. If you look in here at, let me see here. I'm gonna check out the app and see where things are. If you look at some of these meme stocks, like you look at GameStop. Let me see. GameStop in the past week has gone down 23%. In the past month, it's gone down 49%. Now, it's gone up 600% over the last 3 months. So if you bought in the very beginning when it was down at, 20, 30, 40, $50 a share, then you did okay. But if you bought this stock in the last month, you've been hammered. You lost half of your investment. If you go to AMC also in the last week has gone down 10%. In the last month has gone down 25%. Now AMC is up today. And here's what's interesting about this, right? So I saw Jim Cramer kind of talking about it. So I figured I could kind of tap in a little deeper into some of what he said. But basically what's happening with those stocks is that, or the people that are getting just body slammed by those companies, is that they made a huge mistake in investing that you guys hopefully will not make because you're in this class. And that is they did not diversify. A lot of investors just bought, AMC, and then they bought a ton of GameStop, and then they stopped buying. They stopped investing. And when you do that, what you're doing is you're exposing yourself to an extraordinary amount of risk. You're putting yourself in a position where, excuse me, if anything goes wrong, you're going to get hammered and body slammed financially. And that's just not the place you want to be. And that's not where I want you to be. So when it comes to how you invest, remember the number one rule of investing is, well, there's three leading rules of investing. One is you got to get in the game. You got to invest. If you don't invest, then the ability to build wealth long-term or even short-term is pretty much dead. In America, in capitalism, it's very difficult to build wealth without having access to capital, without getting capital, without building capital. Capital is something that you can either get from someone else, you can borrow it. Capital is also something that you can grow, you can create it. In a way, it's a little bit like web traffic. Lamar Tyler, who knows a lot about making money on the internet and all that. One thing he says about traffic is you can get traffic in three ways. You can buy it, you can borrow it, or you can build it. And capital is the same way. You can get capital, you can buy it, you can borrow it, or you can build it. So if I want to buy it, I can take my little extra money consistently, the amount of money I spend on going out to eat and fast food and stuff like that. And any person, almost anybody in this room could become wealthy if you just took the same amount of money you spend on BS, buying shoes, going to the club, going on vacation, going on trips, buying that car that's in your driveway. If you put that same amount in the stock market, you'd be doing pretty well. You'd be doing better than about 90% of all Americans if you've done that over the last 20 years. So you can just, build your capital, just by plopping money in on a regular basis. I've told you guys about that. That's the automatic millionaire method of becoming very wealthy just through automatic, consistent habits. And if you don't know about that, the $5 a day investing plan is a great example of that. Go to the allblackagenda.com. That's the allblackagenda.com. You can find that. Number two, you can buy capital. You can, there are people that buy companies. Once you have a little money, you can buy your way into the game. You can own, shares of a company just like that, things like that. And then, borrow it. That's another way. A lot of people talk about debt like it's a bad thing. Debt is not a bad thing unless you make it a bad thing. Debt is like fire. Fire is not a bad thing unless you make it a bad thing. It can be a terrible thing if it's used in an irresponsible way, but it can be a wonderful thing if it's used in the right way. So never let anybody tell you that debt is always bad. Now, speaking of debt, one of the other reasons that the Robinhood Reddit traders are getting body slammed right now is because a lot of them bought their stocks on margin. A lot of them kind of had a very gambler-like YOLO kind of mindset when it came to investing. They were kind of just like, look, whatever happens, happens. Or they get on there and they lose a bunch of money and laugh about it. And it's fine. I mean, if you want to laugh about it, that's cool. But the problem is there's a point where it ain't funny no more. When if you lose some real money, that's not funny. I don't laugh when I lose big money. And so with those stocks, with like AMC, I invested in AMC. I bought GameStop for a little bit. And the reason I bought those stocks is because I wanted to have a position in them so I could sell the options. I did not buy AMC because I'm waiting for AMC to go up. AMC is already overpriced. I bought shares of AMC because the options premium were extremely high. And all these Reddit traders that were buying these options, because they weren't really just buying the stock, they were buying the options. They were pushing up the price of the options. So the number one rule another rule, an important rule of making money is buy low, sell high. So when something is overpriced, I don't look to buy it. I say, well, how can I sell this? How can I sell this to the people that really want to buy it? So I'll just say this to you, these trends, these fads, what happens when the trends and the fads come along is it's a lot like when there's like some 16-year-old who falls in love and they tell their parents that they're stupid and you don't know what you're talking about and you don't know what it feels like to be in love, and just dumb things that like are kind of ridiculous, but they say these things because right now things are going well. Right now, that's the boy of your dreams and everything's wonderful. And then when the heartbreak comes in, that's when the wisdom comes in. That's when the parent gets the child's attention and sits them down and says, look, this is what happens. You sleep with a boy on the first date. This is what some of those boys do. Well, that's kind of what's going on with the stock market. And what's happening too is, as a result of these declines that the Reddit and Robinhood traders are experiencing, they are also, some of them are leaving the market. Some of them are just like, yo, look, like almost again, like that 16-year-old girl who says, I'm never going to love again. I'm never going to date anybody ever again. Right. And you're like, yeah, whatever. But really, they're some of them are walking away. They're traumatized. They're financially traumatized because they went in and they bought GameStop at, 300 and they've lost, a ton of money, and they borrowed to do it. Maybe when it, and took their savings or bought it on margin or whatever, and now they're getting their butts kicked. So really, the thing about the market that's really interesting, especially certain areas of the market where there's a lot of volatility, is that you have to have the stomach for it. The stomach for it means being able to be just steady, just rock steady, consistent, having a consistent philosophy and ideology that you follow no matter what. So if you want to know what my ideology is, I just tend to buy the dip. I diversify, I spread my money out. I believe in America in terms of the economics of America. I don't believe in everything about America, obviously, right? I've been a black man my whole life. So my God, why would I say something like that? But I will say this though. I do believe that Americans are really creative about making money. And I do know that if I'm buying shares and I'm getting on the boat, I'm riding the train with the CEOs of Disney and Microsoft and Apple, I do believe that these people are going to get into a room and think hard about how to different ways to make money. And I want to be a part of that. Right. So as a result of that, when prices go down, I just tend to buy. You pick your approach and you stick with it, and you spread your money out, and you know that it's going to go down. Now, here's another interesting thing too. A lot of times we get overly, what's the word? We get overly emotionally connected to our market valuations. Like if you have, $8,000 worth of stock and it drops to 7,300, you think, oh, I lost $700 today. No, you didn't. No, you didn't. That's what is called an unrealized loss. You lost it in your head, but you didn't, and that's the funny thing, there's psychology studies that show that when we make money or lose money, we go through these emotional ups and downs. Like, especially for us men, we make more money. We're feeling, what I'm talking about, fellas. You're feeling prouder. You're feeling, stronger. Your woman gets a little more vitality out of you because you're feeling like a man. Like, look at me. I'm making money. I'm a baller now, right? And then you lose your money and you're kind of sad, kind of feeling a little bit smaller. Like, dang, gosh, you're feeling lost, like a relative died. It hurts your feelings, like losing a football game or something. And I know ladies go through their own process as well. Economic security is very much linked to a woman's mental health. I'm just telling you, this is what the studies have shown me, is that, there are women, when a man, from not every situation, of course, every situation is different, but generally speaking, when a man disrupts the family's financial security, that is, in the minds of many women, worse than infidelity. They literally messing up the money get you in more trouble in a lot of households than actually dating another woman. And so, those who act like money doesn't matter, those are usually people who have enough money where money doesn't matter anymore. right? The people who say money's not important are usually people who have enough money. So it's not important anymore. When you have enough money, money isn't important anymore. Like a bathroom. Right now, the bathroom is the last room in the house I'm thinking about. I'm not thinking about toilets and all that stuff, right? But if I really got to go to the bathroom, if I really got to pee, the bathroom is the only thing that's on my mind. Like literally, I would give you every nickel in my pocket if you can get me to a bathroom because I'm about to explode, right? So a lot of times it's about, like your reaction to money depends on what level of that hierarchy that you're on. And some people get to the point where those needs are fulfilled. Once certain needs are met, you can focus on other needs. Just like when kids go to school and the kid can't learn because they didn't have breakfast and the child's parents were fighting last night, right? Well, you got to fix those basic things before you can get to the higher level things. He's not going to care about his math test until he gets something to eat or until he gets the emotional security he needs at home in order to feel comfortable enough to go and do whatever else he wants to do, right? So money is the same way. So what I say to you about money is that I think money is important, but I'm not a capitalist. A capitalist, to me, capitalism says money is the thing, the only thing, the most important thing all the time. I'm not a capitalist, but I've also studied Marxism. When we were talking about Black Lives Matter and stuff like that, and the founders of Black Lives Matter are all Marxists. Well, I spent time studying, the philosophies of Karl Marx, and actually a lot of his ideas are actually pretty good. Some of his ideas say things like that if you are in a capitalist society and you're overly committed to that, then what happens is instead of you doing work that you're passionate about, you do stupid work that's part of where you're a cog in the wheel of some big giant industrialized corporation, and it becomes worthless and meaningless. Like you're sitting at GM just hitting a hammer all day, and you make your money by hitting a hammer, and you're trying to find meaning in hitting a hammer for the entire day, literally spending more time at your job than you're spending with your own children. That's not a meaningful life. That's a worthless life to some extent. Some would say that. And so part of that economic freedom allows you to get access to the rest of your life. When I didn't have to go to work every day, I was able to spend my time living and doing things I wanted to do. My work is a reflection of who I am and not a reflection of who someone else is, right? And so basically that's why economic freedom matters. And so I'm a little bit of a Marxist, but I'm not a complete Marxist because I don't believe all capitalists are evil. I don't believe all rich people are just bad or that capitalists. I think Marx said that capitalists, by building businesses and paying workers one wage and earning another by going to the marketplace, they're stealing from the workers. I don't agree with that because anybody in America, everybody has the right to go and take their money and build a business, right? There's nothing stopping you from going and actually obtaining capital. Sure, maybe you have less money than the next guy, but most of you have money that you probably spent tens of thousands, if not hundreds of thousands of dollars on consumer items. Many of you have assets laying around. I was born in the projects, not a nickel in my pocket. My mother was 17 years old. And you couldn't have been any poorer than we were, right? But the thing was, I made decisions to say, look, I want to own capital. I want to own property. I want to own stock. I want to own a business. Now, did that happen overnight? No, it didn't happen overnight. Did somebody hand it to me? No, it would have been nice if somebody handed it to me, but there's a way to go out here and actually get things on your own. I don't believe that somehow that if you are a person who has made those decisions and you took that, you saved up your money to make a down payment on a house, or you have been putting your money consistently in the stock market, no matter how small it is, or you have been doing all the little things necessary for you to maybe build a little business, that does not make you evil. And that does not mean, that might mean you worked harder than other people. Maybe it means you're smarter than other people. Maybe you had a more long-term vision than other people. But all of us know somebody like that when we were kids, somebody who had a different vision, who saved his money instead of spent it. All the other kids would go to the store and spend the money on candy. He saved his money. And so then, 3 weeks later, a month or two later, that kid has all the money and no one else has any money. And somehow somebody says, well, you should feel guilty about the fact that you made better choices. I don't believe that. I just don't believe that. So that's where I'm not a complete Marxist because I don't believe in this idea that everybody should receive the same no matter what, because some people work harder than others. Some people are willing to take more risk than others. Those of you who run businesses know what I'm talking about. There are times where being a business owner is great, right? You're balling, you're making money, you're getting the big piece of chicken. Everybody's like, oh, look at you, you're so lucky. But nobody's there during those times where you ate last. Nobody was there. Like when I think about when I built my business, everybody who says, oh, you got all these great blessings, blah, blah, blah. You wasn't there when I had to pay everybody on my team and couldn't pay myself, when I got nothing because I needed to make sure everyone else got paid first. Right? You weren't there when I had to go and borrow down to the last nickel and go through financial hardships and all that. That when I didn't have the security of getting that paycheck every week, right? So it's a yin yang. You pick your challenge, pick your poison, right? So when it comes to getting that consistent paycheck, sure, there's that security, there's that simplicity. You go to work, you do your job, you come home, no more worries. But then the downside is that your income will be somewhat limited. But then there's the other side. When you are the owner, when you are the boss, well, sure. When things go well, you get plenty of rewards. But when things go bad, it all falls on you. You get phone calls from people saying, I need you to send me my money now, you son of a bitch. If you don't pay me, and you're like, I don't have any money to pay you. I'm sorry. I want to pay you. I just can't. Well, I don't care. You're a terrible person, blah, blah. But you got to handle that, right? You got to deal with all that stuff. And a lot of people don't talk about that, right? So I just want you guys to understand the ups and the downs of investing versus not investing. I personally think that everyone should invest in something. I personally believe everyone should own something. I believe that you should aim to own a house at some point. You should definitely own stock. You should buy some stock today or tomorrow or this week if you can, just $10 worth if you have to, whatever. And everybody should at some point let's see, it was real estate, stock. Oh, and at some point get involved in a business, a side hustle, a second stream of income, etc. Because when you have one stream of income, you are always in financial danger. And that's another thing actually that's interesting. Karl Marx actually said that too. Karl Marx said that corporations create tremendous amounts of economic insecurity for the workers because corporations don't love you. They're like politicians. They don't love you. They don't hate you. They want to use you. Like, can you do your job or can you not do your job? If you can do your job, then they're going to work with you. If you can't do your job, then you're out. But then even when you can do your job and you have been loyal to them, then they still may walk away because they're trying to cut costs or they're trying to go into a different direction or whatever the case, or maybe that line of business isn't working. So everybody should understand business on some level, because even if you are just a person who says, look, I don't want to own a business, I just want to be an employee. Understanding business allows you to understand both sides of the equation. It's almost like the same way a man who gets married really needs to understand women. He can't just understand the man's perspective. In a marriage, it won't work because she's going to come and say things to you that won't make any sense to you. So workers who don't understand what business owners go through are not going to be able to negotiate properly when it comes to contracts, things like that. They're going to say, oh, well, you own the business, so you can pay us more money. Look at you. You got all this extra money, blah, 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 blah. Well, it's kind of like, maybe, I think a good negotiation is when you have a labor union that looks at the financials and sees that maybe the company's struggling or maybe the company's deep in debt, and that if they push too hard, they're going to destroy the business. They're not going to make the business owners even want to do business anymore. It's like in the NBA. I remember in the NBA they had an interesting situation. A lot of times people think that only workers can go on strike. That's not true. Sometimes business owners can go on strike. The NBA had that when the Minnesota Timberwolves in 1996 gave Kevin Garnett a contract that was insanely big. I think he was making $20 million a year back in the 90s, which was crazy because that's still a lot of money to this day. And when they signed him to that deal, the owner said, we're not doing that. We can't do that. That's too much money. Now, nobody's going to ever feel sorry for an NBA owner. Most of them are billionaires. But what they said was, we have a right, just like you have a right to not work, we have a right to not participate. So they did a lockout. They just said, we're not gonna do business with you because you're pushing too hard of a bargain. And that's true for any negotiation. It's true between a husband and a wife. It's true. It's going to be true for you, whether you're negotiating either as on the employee side or on the employer side. And I think that having some sort of understanding on both ends of what's going on can really create a better negotiation where everybody wins, because sometimes you win, but you really lose. It's like if I'm arguing with Alicia and I'm so determined to win the argument, that I piss her off and make her bitter and resentful toward me, then at some point she may say, you know what, you can have what you want, but I'm leaving this relationship, right? And I don't want that, right? So sometimes there are times where when they say, do you want to be right or do you want to be married? Well, I say it's better to be married, but then again, maybe you decide it's better to be right. Okay, so those are some of my economic thoughts for today. I'm going to jump into more of your questions. By the way, the last session we meet every Tuesday at 11 a.m. Eastern, in case you don't know. The last session we had is loaded. If you log in at the blackstockmarketprogram.com, you can find all the previous classes that we've done. Right there. They're right there. Also, when I answer your questions, I answer your questions first if you submit your questions. And also the stock picks, the stocks that I added to my portfolio this week, that's also in there as well. So feel free to log in at the Black Stock Market